This conference will now be recorded.
And which we did last time was to look at reported scandals, and they had CPA firms who were working with these companies, but still the frauds occurred. Now, you notice that we from 2000 to about 2012, and there's a reason for that. The frauds were not discovered until 10 to 12 later, 5 to 10 years later. And so frauds are going on now. And so you've got to critically look at financial statements for companies you plan to work for companies you plan to invest in, because the frauds are going on. They just come to light later. So here are two fraudulent company reports. I think they're in course content. So one student did ExxonMobil, another one did GE. And they went, beyond the call of duty. The student had planned to work for GE until he did this analysis. So you got those examples. So you to select the company, not a Microsoft, Apple, or Amazon, not a company that anybody on your team has. And you will prepare a report, some of it is the detail depending on how far you want to go, but you want to give me the history of the company. You want to have a picture of the cash flow statement. The student didn't create these; he just copied these uh, off, off the web. Then you want to have a discussion about the financial statements and whether you would invest $1 million or not, whether you would go work for that company. So just couch it in terms of whether you would invest $1 million or not. And these are the various cash flow statements, should be in the primary in order. And each team does one based on their order. So let's talk about then how we're going to get a cash flow statement prepared. So we have a sample one that we're going to work with, and we have a template, but let's go back to the beginning. Last semester, we just looked at cash payments, and we could cash receipts and cash payments. If you have 10,000, that approach will be very onerous to do. And so we look at it a different way. We start off with this basic equation: assets equal liabilities plus owner's equity. Then we'll say cash plus the other assets equal liabilities plus common stock plus retained earnings. Then we put cash on the side by itself, and we say cash equal to liabilities plus the common stock plus the retained earnings plus the other assets. Then we put in the current assets, cash equal to current liabilities plus the long-term liabilities plus the common stock plus the retained earnings, minus the current asset minus the long-term liabilities. As was before, if you buy something, your cash goes down. If you sell it, your cash goes up. And so if these current assets are going up, that means cash is reduced. And we finally said that based on this, if we looked at the change in cash and we looked at the change in everything else, the current liabilities plus the long-term liabilities, the common stock, the net income minus dividends, which is the change in retained earnings, minus the change in current asset, minus the change in long-term assets plus contra accounts. If we looked at all of these changes, we could determine the change in cash. We could determine the change in cash without looking at 10,000 financial transactions, cash transactions. As we know, there are four parts to the statement of cash flow. Let's go back and review that. There are four parts. Operations. This is where a company's cash is supposed to come from. It should be positive. Investments. This is where the company buys plant and equipment, or it might invest in the stock of another company. Then financing. This is how a company finances itself, and hopefully uh, is paying its bills off. And as we said, when you graduated, you want enough salary, which would be your operations, to buy some more other assets. So it should be negative to pay off your student loans and have a positive change in cash. That's your goal. A company has to have the same goal. And when you're investigating a company, you want to see the same thing. Do they have a positive in operations? Are they still expanding? So this investments is negative. Are they paying off debt? And do they have a positive change in cash flow? So you will use this as a guide when you look at your company and decide whether you're going to invest $1 million or not. Now this chart just sort of shows you where the changes go. So we're looking at the location of a change. Cash is in part 4. That's the answer we're looking for. Current liabilities are always in part 1. Long-term liabilities in part 3, the change. Common stock is in part 3. Net income is in part 1, or the net loss. Dividends in part 3. Current assets in part 1. Long-term assets in part 2. The contra accounts are in part 1. So this is showing where the changes go. That is, once we come up with a change, this shows you whether it's in operations part 1, whether it's in investing part 2, or whether it's in financing part 3. Then we have to look at whether the item went up or down. If the liability goes up, it's a source of cash. If it goes down, it's a use. If you get a student loan, your cash goes up. If you pay it off, it goes down. So for current liabilities and long-term liabilities, that's how they work. For common stock, uh, if it increases, it's a source because you put money in the business. If it decreases, it's a use. Let's look at net income. Net income is the source. That's the main source we're looking at. But if you had a loss, it would be a use in part 1. Dividends are always a use in part 3. And current assets in part 1, if they decrease their source, but if they increase, you bought something, it's a use. Long-term assets are going to be in part 2. If they decrease their source, if they increase their use, and our contra accounts, accumulate depreciation, etc., are going to be in part 1. So let's look at this sample company. So when you have a homework problem on cash flow, you're going to have the income statement and you're going to have the balance sheet. And from this, you will prepare a statement of cash flow. So you're going to have an income statement and a balance sheet. And from this, you will prepare the statement of cash flow. So how are we going to do that? How are we going to do that, Miriam? How are we going to get this cash flow statement prepared? Well, we have a template. And the template It's this indirect method. Sources on the left, uses in the middle, and the net change on the right. So we start off with the cash flow from operations. That's part one. And notice the items: income, loss, depreciation. Decreases in current assets will be a source, increases will be a use. Increases in current liabilities a source, decreases a use. Loss on the sale of a long-term asset a source, gain on the sale. So you got a template that tells you where everything goes. The proceeds from the sale of long-term assets is a source. The purchase of long-term assets is a use. Then financing, remember, this is how you finance the business. So if we issue stock or we get a long-term loan or a bond, that's a source. When we purchase treasury stock, that is, we purchase some of our stock back, that's a use. Repayment of a long-term loan, payment of a dividend, and then a change in the cash flow. Does everybody have this template, by the way?
Is it on Blackboard?
It's in the primer. I don't know if it's on Blackboard or not. I
Okay.
will try to get it on the template, on a template in there in just a second. Okay. So here are the financial statements, and I want you to prepare a statement of cash flow. Okay. So some people are going to scratch their heads and say, I'm confused and I don't know what to do. Uh,
Okay, so Mr. Boyd, just to be clear, so basically all we're doing is we're finding the difference between the income sheets.
no,
Yes, no.
remember when we looked at it, it was the balance sheet. The change in cash equal the change in all these other accounts. Okay, so I got four things here in red. Okay, so when you do a statement of cash flow, I got them numbered so that you can get yourself started and you won't be so all confused. The first thing you're going to do when you prepare a statement of cash flow is calculate the change. That's the answer to the problem. So once we do the changes in part one, part two, and part three, for the change in cash flow, we're going to calculate that and put it right here where that red one is. Then the second thing we're going to do, we got,
Sir, I can't see what you have on your screen.
can anybody else see it? I'm going to send one to you in just a second. Can everybody else see it, or can you see it, or can you not see it?
I can.
Most people can, but I'm going to send one in just a second, and we'll go back over it again. The second thing you're going to put on that statement of cash flow is the net income as a source or the net loss as a use. You won't have both. You just got income, that's a source. You got a loss, that's a use. The third thing you're going to put on the cash flow statement is depreciation expense. Remember, that's a non-cash item. And so you're going to put the depreciation expense on there. And the fourth thing you're going to put on that cash flow statement in this template location are the dividends. Okay, so that's the fourth thing that you're going to put on the statement. And so everybody should have this sample worked out problem. What I want you to do now is to do those four things I told you to do. And if you can do those four things I told you to do, you got a C on the exam. So if you can just do those four things, you can put the change in cash, the net income, depreciation, and dividends. If you can get those things done, you got a C. So let me try to copy this and get it in, put it in Blackboard while you working, doing those 4 things I just told you to do on this problem.
Professor Boyd.
Copy.
So we start from the change in cash flow. You get that from the 2 years in the balance sheet.
Mm-hmm.
Okay.
Okay, so you should have now in Blackboard both this problem and the template. So go to Blackboard and get the problem and the template if you don't have it. And we're in the process of coming up with a statement of cash flow. And I tried to include as many things as I could in the example so your guide would be the complicated as you work your homework problems team by team, it would not be as difficult. Okay, so if I go to the template, what y'all gonna tell me? Do y'all have those 4 things done? Or do y'all have thing 1 done? Okay, so what we're gonna do, we're gonna go, you notice I put this change column here. At the beginning of the year, the cash is 100,000. At the end of a year is 100,000. So the change is 0. So the answer to the problem is 0. When we do all of the changes in parts 1, 2, and 3, if we do it correctly, the answer would be 0. Does everybody see how I got the change in cash? We need the net income. So we go to the income statement. And it says it's a net loss. So what you going to do with the net loss? What are you going to do with that net loss? Where you going to put it on the template?
Under operations. We're gonna put it in use.
Gonna be in use. So we're putting the 75,000 right here. At our 75,000. So we're gonna have income now. Now I need some depreciation. Where am I gonna get that depreciation from? There are two places we can get it. We got a depreciation expense here, or we can go to accumulate depreciation. And the change was an increase of 25,000. So I can get it from here or the other place. So I'm going to go to depreciation expense and put in 25,000. Okay. I don't necessarily want that red. Okay, so we've got the loss in, difference between ending cash. Got that in as 0. We got our net loss in. We got our depreciation expense in. So what was the fourth thing you're supposed to put in? What is the fourth thing you're supposed to put in? Isn't that big and red? What's number 4?
Dividends.
Dividend.
So how much are the dividends? Well, it didn't tell us.
4.
Professor,
So
I got a
what?
quick question.
Yes.
You put the tab in assignment or in the announcements tab?
Send course content on the
Okay.
cash flow.
All right. Thank you.
Okay. Johnson, we need to talk briefly after class too. I think you're the only one on here that's not on the team. Is there anybody else who's not on the team?
Jatavia Johnson, yes, sir, I am on the team.
Oh, are you? Thank you.
I've been on team 2.
Okay.
I,
I will send out the your preliminary grades later today, reflecting the cash flow paper, cash flow, fraudulent company reports, and your study problems, so you can see where you are. Okay. Uh, y'all got that depreciation? I mean the dividends calculated yet? So they don't tell us. So we're gonna go to this statement of retained earnings and prepare a statement of retained earnings and see if we can come up with the dividends. So it tells us that the beginning retained earnings was what?
It went from 300,000 to 200,000.
That's correct. So the beginning retained earnings was 300,000. The ending retained earnings is 200,000. We had a net loss. So what are we gonna do with that net loss? On the statement of retained earnings, that loss of 75,000. So if it's a loss, we have to subtract it. And so that tells us that what? Our subtotal for retained earnings is what? So what must our dividend be?
$25,000.
25,000.
25,000. Okay, so we're gonna go put our 25,000 in for dividends. So once again, when you get, if you're not clear, then that's what I want you to do. So let's look at where we are now. Because we put the change in cash in, we can go and strike that account. We can also go ahead and strike accumulate depreciation because we've taken care of that change. We got to look at every change on the balance sheet, but we're striking out the ones that we don't need, and we can take care of retained earnings. Now, the retained earnings changed. It was actually 100,000, but it was in two parts. 75,000 decline for the net loss, 25,000
Mhm.
decline for dividend. So remember, we have to look at every account,
A quick
and so
question.
now we've got some accounts taken care of. We'll go to account receivable next. What did the account receivable do?
It went from 75,000 to 50,000.
All right, so it went down. So we look at our template. Whenever a current asset goes down, that's in the current section, it becomes a source. So the account receivable, as it went down by 25,000, it's a source. So we're simply going through each account. Remember we said we're going to explain it in terms of every account. So now with the receivables, we can scratch one. Got that taken care of. We next need inventory. What did inventory do? Went up by 150,000. So that becomes a use. When the receivables came down, that was a source. When the inventory went up, it was a use. So we're gonna put the inventory here.
Okay, then so in that case, Mr. Boyd, so whenever whenever the cash flow goes down, it's gonna be a use, and whenever it goes up, it's gonna be a source.
Whenever the current asset goes up, it's a use. When it goes down, it's a source. So we got to think of it in terms of these items and how cash impacted. Remember, when we bought inventory, eventually, it might have been on accounts payable. We had to pay the account payable. That was a use of cash. So that was 150,000. we're going through item by item. Just looking at the changes. Once we get them in, we strike them out. But we put those 4 in just so if you got confused. What did the equipment do?
It went up by 300,000.
That's a long-term asset. What part of the statement is it going to go in? The long-term assets are in part 2. So we're going to put equipment here. And so, because of this process of calculation and understanding, people fail to look at this statement when frauds are coming on. And that's why they're frauded. So it's different. But you got to, learn how to, not so much learn how to calculate it unless you're an accounting major, learn how to understand it. So now, we got the equipment taken care of. And the only other asset we have is the investment in common stock. And that's going to go in part 2 also. So what did the common stock do?
It went down 50,000.
It went down by 50,000. We got rid of all of that. But if we had a gain on this common stock of 25,000, how much cash did we get? If you had something that cost you 50 and you had a gain of 25, how much cash did you get? If you bought something for $50 and you sold it at a profit of $25, how much cash would you get?
75.
75,000. So for the land, put this 75,000 in here. Now, if we look at the income statement, uh, the gain on the IBM stock was 25,000, so they actually lost $100,000. But see, we could have had a $300,000 gain, and we wouldn't have known operations in bad shape. So what we're going to do is we're going to take this 25,000 and put it over here. So we're taking it out of operations, the gain, putting the cash received down here in part 2. This is where, when we talk about you going to Las Vegas and selling your car, well, that's a one-time deal, so you're not going to have this anymore. Okay. Okay. So that was a little more difficult, but that's you're taking the gain out of here. You had a loss, it would be on the other side. And we combine that. I've got all assets taken care of as we do our statement of cash flow.
Quick question.
Yes.
The ones you strike, they all equal out to zero, correct?
No, we got to change. They didn't equal zero. Well, eventually that's going to be the case because it's changing cash. But remember, we're explaining the zero changing cash in terms of all of the other items. We're changing the zero changing cash in terms of all of the other items. And we don't worry about total assets. We go to account payable. What did account payable do?
Went down 50,000.
So if your student loan went down by 50,000, what happened?
You paid off 50,000.
So your cash went down. So we go to the template. A decrease in the current liability means the cash went down. Okay.
Professor Board,
Yes.
what did you say about the IBM stock?
Well, we'll come back to it.
Okay.
But for the IBM stock, it went down by 50. That means we got rid of it. But we had a
Okay.
gain on the sale of 25,000. So that means we got cash of 75,000. 50 plus 25, 75. That's how much cash we got. That's what we have to put. Then we're going to take this gain and take it out of operations and put operations back at 100,000. We don't want unusual items in operation, non-recurring items. That is, this company is not selling books. It's not in the business of selling the IBM stock. And so when you are looking at a company, if they're doing things like this and they don't have money in operation, it's a problem because these are non-recurring items. This is like Macy's selling its stores and getting money that way. Got a negative here, but it's selling stores. You know what's going to happen eventually. So now we got the account payable taken care of. Long-term bond payable, what did it do? It went up by $450,000. What we're going to do with that?
Put it
There's
in
some
the
long-term
increase
items
in
that's
dividend.
just going to come down here in part 3. So that takes care of the long-term bond payable. And we only got one more item to do. We have our statement of cash flow done. Just one more item. Didn't take long either, just 1146. We have common stock. And common stock did what? It went up by 50,000.
Increase of 50,000.
So that's going to become what?
That's part 2.
Now this is the common stock. That's the financing of the business. So that's always in part 3. 50,000. So what we separated is the cash that came from financing the business. That's fine. The cash from selling long-term assets is in part 2. And then the cash from operations. And of course, when you do your homework, you to tell me whether you're going to invest $1 million when you do that homework company. So how many people gonna invest $1 million? Well, we better go and calculate it first. So what we do, we add up all the sources in operations. So the sources were 50,000. Then we add up all the uses. And the uses were what? If I add this number, this number, this number, and this number, how much do I get?
300,000.
Sure. 75 plus 150 plus 25 plus 25. So we're adding the sources, then we're adding the uses in part one. Look like that might be 275,000. Okay. So
It's
when we
three.
look at part one,
Professor Boyd,
yes,
which one is 275,000?
everything in part one from the net loss all the way down
So you don't do anything with the net loss? You don't add the net loss?
did 75, 150, 25, and 25. So
Okay.
we had everything on the source with everything on the use.
Okay, so I have a question.
Yes.
So in the book, it got 50,000 on accounts payable, but you got 25 in accounts payable.
I have what?
You have 25 on accounts payable, but in
Did
the
I put
book
that
it's
in
got,
wrong?
I don't know. Yeah, because it went down by 50,000.
Yeah, it's 50,000. Thank you.
You're welcome.
So this should be 50. I think I just copied that. So this should be 50,000. So then this would be what?
300,000.
So what's our change in part one?
250,000.
Positive or negative?
Negative.
So right away we know what? Based on our guide, there's a
She's not
problem
going to
with
invest
this company.
in the company.
So
Because
what?
it's supposed to be positive, right?
Yeah, it's
She's not
supposed to be
supposed
positive. It's negative.
to. You
Only
want to
section
invest.
2 is supposed to be negative,
Right. And three.
and 3, okay.
So when you look at your company, you see, just like you did it here, this is negative. It's a problem with this company. Okay. If we go to the investment side, we have 75,000 positive. We have 300 negative for uses. So what's our change in cash in this section? With 225,000? That's okay. That is, we want the company to be investing and expanding, so that's okay.
Question.
But the
So after
problem,
I have a question.
was they didn't get it from operations. Where did they get the money to expand from?
Investments. No, no, no.
Let's go to the investment section. They got issued some more stock and borrowed 450,000. So what? And then they paid a dividend of 25,000, which is a use. So this becomes what? 475, come up 300. Any questions? So a minus 250 and a minus 225 is what? A minus 250 and a minus 225 is how much? Better get y'all Excel out. 250 plus 225 is how much?
475.
75.
So we got a minus 475. We got a plus 75 here. So we get our answer from our calculation. So this is the answer from our calculation. It agrees with the change in cash that was on that balance sheet. So now, ladies and gentlemen, you know how to prepare a statement of cash flow. You know how to prepare a statement of cash flow. Something a lot of people don't know how to do, and they don't know how to interpret it. And so when the fraudulent companies come by and they have no sense that I need to look at operations. Are there any questions? Well, I put you to work.
Mr. Boyd, can you post the finished product that you just went through because I'm definitely missing a couple pieces. And I just want to use it for comparative reasons. That's it.
Okay,
I have a question.
do
So
that.
if you find out at part one that is negative, can we go ahead and already off rip say that we wouldn't invest off of that strictly?
Pretty much.
Okay, cool.
That's just like you personally.
Okay.
If you don't have a job,
Does that necessarily show us enough?
it's showing a lot.
Realistically?
Okay,
But
let's
I'm
look at
saying
you first. It doesn't show
like,
everything,
that's what I'm saying.
but
Are there
let's look.
companies that show operations negative that aren't fraudulent?
Yeah, but that's still not a good. If they're not making money, they don't have to
True.
be fraudulent. If you go work for that company, what's going to happen?
Boom. End up losing your job.
Right. So suppose you had a significant other, and you went out and bought a car, 50,000 on credit, and you got another 25,000 on student loans. So how you think your significant other is going to feel about the fact that you got a car for $50,000 and you got 25 in the bank because you got a student loan? You got 25,000 in the bank and a car you owe 50,000 on and no job. How would your significant other feel, Chris?
Late.
Kick you to the curb.
Yeah. That's not smart at all.
Right. So you got to be able to look at companies that like this, whether they're fraudulent or not. You got to be able to look at a company and see if this is what's going on. So it's not just whether it's fraud or not, but poor management is just as bad as fraud, you know.
Yeah.
If you're not making money, as it's just as bad as fraud.
Also,
Okay,
back to that. No, I got another question. I'm sorry.
okay.
Back to that. I think it was the. Oh no, you had answered on the investment IBM stock on why you had put. Never mind, I got it. I got it.
Yep. So you have to be able to look at the cash flow statement. You know, you got the balance sheet and income statement, but you got to look at this cash flow statement too. Finance people have to be able to look at this cash flow statements. Finance people will have this cash flow statement in their first finance course, but they're going to be able to knock it out. Now, what I want you all to do, each team is to go to their assigned problem. So every team is going to go to their assigned problem. Each team member, and you're going to do the first four things on your assigned problem. So I want each team member to go to the problem that's been assigned and do those first 4 things. So they're in the primer. Maybe I'll put
So,
that in too.
so we're just doing the first four, not the whole thing, right?
You're doing the first 4 before you leave class today.
Oh, okay.
I just want to get you going so you can't say you didn't do anything. So everybody go to their problem and do the first 4 things.